Welcome to Black Expertise, where we don't just highlight what Black professionals do, we break down how they think, how they build, and how they move. I'm your host, Renée Holtz, and today's conversation is one that shifts perspective in a real way, because we're not just talking about money, we're talking about how money actually moves. Because most people focus on making money, but very few understand the systems that control it. And today's guest is someone who operates inside those systems. Taweh Dempster is working at the intersection of fintech, payments, and economic empowerment, focused on rethinking how transactions happen, who benefits, and what it really means to build power through financial infrastructure. This conversation is about access versus ownership, participation versus control, and how we begin to position ourselves differently inside the system. Taweh, welcome to Black Expertise.
Hi, good morning, Renee. Thanks for having me. It's great to be here.
Thank you so much for joining on this channel. Let's start at the beginning. I'm going to just ask a few questions and you can just feel free to answer at your own leisure. This section is just how it all began. What was your earliest experience with money or financial systems? And when did you realize the system wasn't built equally for everyone?
M3T as a company itself started quite a few years ago. We're doing about 20 years, but we started primarily in the print and marketing space. In that time, what I realized in working with my clients was it didn't matter how great your product was, how your services flow. If you didn't control the money as a business, you wouldn't stay solvent. So as part of our dedication to taking care of clients, we evolved to meet that need. So in the process of working with my clients in just helping them with their branding and marketing, what I realized is money played a much bigger part of it, because you needed the money in order to not just fund the promotions and things like that, but you needed the money to keep your business afloat, to feed your family, that kind of stuff. And so as part of my approach has always been to serve in the client's best interest. So in reviewing the financial part of it, I realized that a lot of businesses, you ran into one or two problems when it came to the money. The first one was getting paid.
Mm-hmm.
How easy is it for your customers to pay you for your services, to collect the revenue needed, right?
Right.
Then the second one was, how much fees are you paying out to the people who are helping you collect that money?
Yes. Yes.
So in taking a look at the payment industry, we realized that, okay, but 95% of the buying market are not paying with credit cards,
Mm-hmm.
which means that if you want to get paid faster, you need to give your clients the opportunity to pay you in the easiest way that we do it today. So
Right.
you need to go to your credit card, you need to do online or digital invoicing, do recurring payments, those like that. So those systems are in place. Now,
Mm-hmm.
once we have those systems in place, the next step was, all right, well, how much are you paying out for these services? What I realized in the industry is a lot of times what you had was a lower introductory rate to sign up with a partner.
Right.
Then that rate would what we call it rate creep, where slowly you would realize that for the same amount of processing volume, the amount of fees you were paying kept going up. So you
Right.
would get a year and a half in and realize you're paying so much more than you were when you started out, which means that's a drain on your profit margin.
Yeah. Yeah. That makes sense. So you really discovered that your perspective shifted when you were really digging into their books and realizing they would have to meet these goals in order for the money to even make sense. Just to move the money, the big boys were taking a lot off the
Correct.
top.
Correct.
Yeah.
Correct. What we came up with was a partnership with strategic partners within the finance or the processing space, the fintech space, and essentially worked out an agreement where for the accounts that we serviced, and that we would bring onto their platform that would have some basic guarantees.
Right.
Okay. We would be not just competitive, but generally we want to be lower than your average market rate. So we're going to be
Mhm.
competitive within the market. We would assure a guarantee lifetime rates. So when
Mm.
we set up your rate from day one, there were no rate adjustments again. There weren't allowed
Right.
rate adjustments going forward. So, and then the third component to that was for 95% of my clients had no term contracts.
Mm.
So what you set up for was a month to month solution,
Yeah.
a guarantee you got funded, and no rate increases.
Wow.
And then the final piece of that was I would be your primary contact as far as the money goes. So I'll help you do rate reviews. I'll make sure that everything stayed the way it was set up to begin with. I am accountable for those things. I get to not only help improve your profile from a marketing standpoint, but now I get to make sure that you collect as much money, you improve your profit margin by not paying out so much.
Pursue. So, and okay, moving into the second section of question,
Mm.
someone who's never thought about it, because yeah, someone like even myself would think using this platform and this platform, I'm paying them monthly and per transaction. It as a small business, it's like I'm not thinking about everything that happens to move that money into my account. So for someone who's never thought about it, if you're able to answer this question, what actually happens when we swipe a card? Like who are all the players involved in that transaction that we don't see? Or yeah, half your money is gone by the time it gets to you. Get your-
Yeah. So the process when you swipe a card, well, let's talk about the players first. The players are the card brands. So these are Mazda, American Express, and Discover for the four known brands within the US, our international brands as well.
Right.
Four known. And then you have the banks, the issuing banks, because the part of the fee that's collected when you process a payment goes to the card brand for using their Visa or Master or Discover. You also pay an access fee across the board. The bank that issued that credit card also has a fee built in as well for giving out that
Mm.
line of credit to their customers.
Right.
So all of that, then if you factor in, say, someone who has a reward card that gives them cash back or travel miles back or that kind of stuff, all those fees are also then tacked into it.
Oh my God.
So, but they're all micro. They're also the smallest amount of fees within the structure is the branding fee because they're getting it everybody,
Mm.
right? So Visa fee is going to be small because they're getting the branding fee from everybody who uses Visa.
Right.
Whereas a bank that's issuing that card, they're only getting it from people who use that card. So their fees are going to be higher on the list in terms of how the amount that they collect. So that is the players that get in. And obviously you have the processing company who collect a fee providing the service of getting the money, that kind of stuff. So those are the primary players within the industry.
Mhm.
With regard to the process itself, when you actually swipe a card or do contactless or chip, it happens in microseconds. But what happens is your card data is collected. That information is sent through the Visa network to your bank. Bank verifies that you have enough funding in your account to cover that bill. Good standing. The bank issues an authorization code that then reports back to the processing company, which reports back to the card machine, which reports back to the point of sale if you're using point of sale. So it's like a 5-step process that moves that money. I'm assuming, I mean, that's what you meant, right? In terms of how the money goes through the system.
Yeah, I mean, that's not my industry at all. I just know they take a lot before it gets in your bank account. And it's a question of just who really controls the flow of money. Why does that matter more than people think? And
Well,
you bringing that solution to businesses is why I have you on here.
So there's a part, actually, all of it, there's a part of it that's unavoidable is the wrong word. That's non-negotiable. Okay. So within that industry, we have what's called interchange. Now, this is a little bit of a deep dive. Interchange is basically the wholesale rate. Actually publishes their interchange book. It's about 32 pages. Of,
Mhm.
well, not all pages are considered to have fees on there, but at least 20 of those pages will have different fee structures for the type of card that you use. Interchange is the wholesale rate. So it doesn't matter which processor you use. It doesn't matter which service provider you use. We all pay the exact same wholesale.
Mm.
Difference is how much above wholesale does the individual pay, and that's the money that goes to the processing company for providing the solutions.
Yeah.
Some companies have gone with a flat rate format. So if you think PayPal, and you think Square, if you think Stripe, it's a flat rate structure. But what that does is their revenue stream now is based on what kind of card you use. If your client is using a card that has a lower interchange rate, as a processor, you make more money because it's a flat rate. You're charging the business no matter what.
Right.
If so, was a simple, I guess give you a simple mathematical example. If a wholesale rate is 1%, and you go with like a Square that's 0.75%,
Mm-hmm.
then that card, Square pays the wholesale rate of 1%. They keep 1.75 for themselves. But if another client comes into your business and they use a reward card that has a 2.5% or 2.95% rate, Square might actually make less or lose a little. So it's aggregated over the entire accounts. And the hope in that flat rate environment is they hope that your clients are using more cards with lower fees,
Mm-hmm.
so they get more money versus your cards with higher fees scenario.
Yeah. So, how do the current payment systems, in your opinion, impact small businesses and underserved communities? Like, is it even worth using if they're not making a certain amount of money annually?
Well, not necessarily. I mean, so in order to grow, you need to be able to accept payments in the way
Right.
that your clients are going to pay you.
Right.
So industry wide, most businesses, most cash only businesses will experience anywhere between a 30 to 40% growth just by adding the ability to accept cards on it. So there's a fee for that. So my recommendation is to any business starting out the gate, regardless of how much you make, accepting electronic payments should be in the works from day one.
Mm-hmm.
On the nature of the business, depending on the average transaction, depending on the volume, which processing platform is best for you. So when I do a consult with a client, those are the things that we talk about.
Right.
Where are you are in terms of sales volume? What's your average transaction look like? Things like that. Where are you best served? If it's with a platform that I can provide, great. If it's not, I will tell you which platform will best serve you in
Mm-hmm.
the short term, and I'll let you know which benchmark you can meet in order to get a better rate. So if
Right.
you think about it, it's along the lines of someone who has even like the best credit score,
Mm-hmm.
pay a higher fee in anything that you finance, right? But over time, as you improve your score, you can actually lower the fees you pay for things you finance. Same thing in the processing space. So when you start out, you don't have the volume to go with. You might pay a little bit more, but as your volume of sales increases, you can actually negotiate your rates
Hmm.
down. Now, most companies won't tell you that because they don't
Mhm.
want you to know that. Okay. They basically, they will put it in and they would leave it. And if you never look at your statement, they will not make the adjustment for you. Something that I do as part of my services, I assess my client's account quarterly, semi-annually to make sure the numbers are good. If I have an account where we started off and you were doing $10,000, $20,000 a month,
Mhm.
in a year, you're up to 50,000, 100,000 a month in revenue. I do an assessment. Even before you come to me, I do an assessment.
Right.
And then I have a rate adjustment done. But granted, that rate, that volume has to be sustained over time. So it can't be where you have a 1 month real big spike and then we do a rate adjustment. That growth has to come in and be sustained over a few months for a rate adjustment to be implemented and justified.
Right.
But that happens organically on my end. So it just depends on who you partner with. And there are
Yeah.
some companies out there too.
Okay. Well, I want to pause right there because if this conversation is already shifting how you think, that's exactly what Black expertise is built for. This platform is more than a podcast, it's an ecosystem designed to highlight, educate, and connect Black professionals across industries. Inside our private community, you'll find deeper conversations like this, self paced workshops, and real tools to help you move from information to execution. So, if you're ready to think differently and build differently, make sure you tap in, join the network, and stay connected. Now, let's get back into it, Taweh, and get into our third section of questions. It's really a theme of just ownership and infrastructure. Like, I've been in business a long time and I'm just learning that I've been doing it wrong the whole time.
Like, you start
Well,
something.
been doing it wrong the whole time. And so I'm gonna just throw three questions. I don't want to overwhelm you with the questions, but I just like people to just talk freely and kind of not feel like they're boxed into knowing one thing. But you've mentioned like the importance of the whole infrastructure, just how you're setting up to move the money. You break down what that really means, in your opinion, from your experience, and the difference between, because you opened my eyes to it, just between participating in a system versus owning part of it. I think that's really the important part of what you bring to the ecosystem of business.
So when you talk about the infrastructure and owning, there are barriers to it. So from where I sit, after reviewing the industry, doing my own research and figuring out how I was going to navigate this, I realized there were a couple of things that I was not going to be able to accomplish. For processing, in order to move money to the network, you have to have a bank partner.
Mm.
Bank has to underwrite your entire processing platform to move the money legally to the banking network. There are regulatory functions and things like that are required by the government, things like money laundering, preventing terrorist financing, preventing fraud. Those active systems are pretty huge. So I couldn't build those.
Mm.
The financial outlay to build those things was just too much.
Hmm.
So the path I took in terms of my ownership is to create an independent agency that could partner with the businesses that already had those structures in place,
Right.
with the understanding that for the accounts that I bring to their platform, those are my accounts, they're my clients.
Mm.
The understanding is, as long as you meet the criteria for which we brought the business onto your platform, we'll stay, the clients will stay, no problem. If you ever breach any of those, I have the right to move my clients to another platform that will honor the original terms.
Right.
So the ownership that I have is the ownership of the relationship with my clients, in
Mhm.
that they trust me to look out for their interest, and I hold the partners that I work with accountable to make sure that those interests are met along the way. So I have some ownership, but not complete ownership.
Right.
Within the processing space, there are really there were five. Now I think that I've been like, well, so there were seven. Now I think there's only like four
Okay.
actual processing company. Everybody else is a reseller on their platform.
Oh, see, these are things no one knew. Well, I didn't, but this is clearly a way that you even set up the infrastructure, not necessarily owning your clientele and that the decision making process. You know, you're the person in between where you choose to shop with all these people. Like that's your power is having the people, the clients.
Correct.
How would you explain this idea? Feel free to answer, or you could say skip, we'll go to the next section.
Okay.
Yeah. How would you explain this idea? You don't build wealth just by earning. You build it by controlling how money moves.
I mean, I feel I agree with the statement, right? Because if you're only earning and if everything you earn goes out the door, there's no opportunity to actually build wealth. It's basically what you are as a conduit,
Mhm.
right? So I agree. So controlling how money, I don't just say money moves, but how the money works for you. So instead of being a conduit, you have to figure out how to make the money that's coming in. Well, how to earn, generally how to invest. Earn, spend less, and then invest the difference so that the excess amount actually starts to make you money in other areas. Is how I would look at this. I don't know about I don't know about I don't know about controlling the money or controlling how it moves. If that's the right phrasing, I would say more in terms of, or I guess it is. I'm not sure. This sounds like bigger than me. But yeah, it's
I just see you in a position of where, like you said, if the processor doesn't abide by the terms that are best for your customers, your client base, you essentially are controlling how the money moves because you got a big base of people that need that system, you know? You can negotiate those terms.
correct. In that way, then yes, I do have some control over that. So I have on as we speak, I have essentially 4 partnerships in terms of the processing. 95 of my 95% of my clients are actually on one.
Right.
Where I have a 5% on another, and the other 2 are more like backup in case
Mhm.
it doesn't work out. More option
Right.
because in my mind, if you don't have the backup and the built-in infrastructure, then if should the opportunity or should the necessity arise to have to move an account, where are you going to put them if you don't already have somewhere already
Yeah.
line? So I had that at all times, and meet with the account. I figure out, okay, what best serves you, which of these best serves you,
Mhm. Yeah.
and that's where you go.
Right.
You like you said, in terms of moving, in terms of controlling the money, as long as they do what they're supposed to do, the money stays, or the business stays with them.
Mhm.
It don't, it'll move as needed. Now, there's also been a willingness on the client's part to move account because it's not like flicking a switch.
Right. Right.
You know, you have to agree to have the account move. Always has to be signed. So, and it's a partnership between myself and the client. Hope that it's in the ballpark of what you're looking for. Sure.
I agree. Whatever the answer is. So in this section, I want to talk about building in the fintech industry. For someone who's watching or listening who wants to enter fintech, where do they even start? Like how do you even get involved in this industry to like should they have certain skills or what is the most valuable skill in this space right now? Like is it sales? Is it processing?
Um, I
Being a people person.
more than anything is people first.
Mhm.
More than anything else, it's putting the need of the people you work with work for first.
Yeah.
Everything else falls into place if the people you serve are the center of the focus. Anything else can be learned. In
Mm.
terms of the processing space itself, there are companies out there. I mean, there are hundreds of companies out there that serve independent reseller or ISO, independent sales agencies like myself. So you could definitely find a partner to work with, right? So what separates you from everybody else is what is it's your honestly is the biggest entry. If you're in it primarily to sign new accounts and just generate revenue, that's the wrong approach. in my- Okay,
Mhm.
the approach should be what is in my client's best interest. How do I help them grow? How do I help them do what they do better, more efficiently at a lower cost? What that does, it creates two things. It allows the clients one to grow, which means they're happier with your service and they're less likely to leave.
Mhm.
Creates an opportunity for new partnerships, to referrals, but and then also then because they're not leaving, because again, part of our revenue is generated through the processing itself. So
Right.
if clients is staying with you, so instead of having I call it churn and burn mentality, where you sign an account and you string them along until they realize you're not doing what you're supposed to be doing to protect them, and they leave you within 2 to 3 years, and you go sign a new account. I'd rather sign one account
Mhm.
and have that account be with me for the next 20, 30 years.
Right.
So I don't want the churn and burn. I actually want the relationships that last. Let's just say a lifetime. And
Mhm.
so for anyone who's entering this space, the right mindset coming into it is client focused, client centered. Because you can learn how to you can be taught how to which systems work best for what client, for what product, kind of stuff. You can learn how to fill out an application. I mean, it's basically a step-by-step process.
Yeah.
All the things can be taught.
Right.
What can't teach is client focus. That has to be that's an individualized trait. You have to be client focused. It's their benefit first.
Right.
Everything else falls into place out. So entry is easy. The focus is what needs to be the priority.
And what opportunities do you see coming that people should be preparing for now, in if they wanted to be in this building in this industry? I mean, is there any because in my opinion, this is one of those industries that will always be there because there will always be business and commerce and that transaction needed. But even with what's going on in the world or with Bitcoin and everything, like, is it still one of those interchangeable skills to have? Just first of all, being a trustworthy people person that's helping others save money, but just the industry itself, I'm
No,
guessing.
I mean the payment industry is ever evolving. So you're
Mhm.
mentioning Bitcoin. Bitcoin may not be a part of the portfolio just yet, but eventually it will. Once Congress regulates and finds a way to integrate the Bitcoin into the financial industry, you know, payment will probably pivot to allow for Bitcoin payments if that becomes a part of the industry. So electronic payment is not going away. It's going to continue to evolve. It's going to continue to get easier. I
Yeah.
mean, we went from the old school mag lift thing where you had the card reader, we had to do the paper thing and shit,
Oh,
that's,
yeah.
you know,
Oh, yeah.
we went from that. We went from that to the swipe strip on the back of the card.
Mhm.
Then we went to the chip reader, and now we're contactless on most cards. And now we have your digital wallets. So you
Right.
use card with you. Now your card information is loaded on your phone, and you can just, so those evolutionary traits are going to continue. It's easier and easier and easier to access the payment. The industry is aware and is evolving along with those things. So, um,
And
in
there's
terms of
always new entrepreneurs being built that need these payment systems. So yeah, I think it's
exactly, and and
definitely
and,
cool.
and, and the industry is evolving to meet those needs in every step of the way. So, as someone who's in the industry, I just have to stay present.
Yeah.
or someone who's getting into the industry, same thing, presence, up to date with what's happening in the industry. So be well researched on what's available or what's coming down the pipeline, you know, and partnerships.
Right.
I don't know everything. I will
Mhm.
never claim to know everything. I rely on expertise. I call you sometimes when I have questions about things. I have partnerships with other people within my industry. I don't see others who are in my industry as competitors.
Yeah.
You
Yeah.
know, yes, they hopefully help me be better.
Hmm.
But as far as I'm concerned, there's enough need out. I
Yeah.
can't service every, and as much as I would love to, I can't service every.
Well, that's a good transition into the next section, talking about community and impact. Can fintech or just this industry, because I know I guess it is financial technology, but how can it be used as a tool for real community empowerment, in your opinion?
I mean,
And
I think that's. Oh, sorry, man.
and now I'm just, and what does a financially empowered community actually look like in practice? Like,
I think the financial empowerment or the community impact has less to do with the fintech company and has to do with the consumer.
mm,
Okay. So one of the things that I try to promote, not just with my client, not with my clients, but I promote through their businesses and to the consumers out at large, is that any money spent at a local business, okay, you have 60% of that money staying within the local versus going with a big national chain or whatever it is where the money hits and it's gone to wherever they need to go. It doesn't stay in the community. So the supporting the local businesses is where you're gonna have your biggest impact. And that's not controlled by the fintech or it's controlled by the consumers. So they have to support their local businesses. They have to go in and spend local dollars within the local shops. And that money stays within it because that becomes part of the tapestry of whether it's tax revenue, whether it's the business owner spending money within the
mhm,
or the businesses supporting local charities and local organizations within the community, things like that stays in if the consumer base spends money within that local. So fintech essentially collects the money. Where they collect and then move the money from one to the other. In terms of how that money impacts the local community, that's strictly on the ground level. It's strictly channeled by how consumers
yeah,
use their money.
right. Just keeping it local, keeping it small. And yeah, that's a good point. Because I'm thinking about the actual business owner. Like, it is about where we spend it and not just letting those dollars leave the community so that we make it.
Perfect. I mean, and from a business owner's perspective, I mean, it's most business owners tend to be a part of the community they live in. So
Mhm.
same
Mhm.
thing. The money that comes into their business doesn't automatically go out of the community.
Mhm.
Right? They live most of them live in the community. They got family in the community. They do things in the community, so that money stays local. Most businesses will support local organizations. They'll have something that they are passionate about. You know, they do that. So I I've got 4 kids, 2 girls. They're I call them my warrior princesses because even though I showed them how to change the car tire, I don't expect them to be changing car tires. Okay, I expect them. I know, but they need to know how, right? But my girls are my world, so I am part of an organization that support young girls.
Mhm.
So I support through being on the board. I support making donations like that. That's how my money supports my Lord because it has an impact beyond, right? So it's going to be up to the individual business owners who have businesses in there to support the charities and the things that they talk about. And most of them do,
Right.
right?
Okay. Well, now we're at the section of just rapid fire questions and answering.
I think I'm ready.
It's just whatever comes to mind.
Mhm.
All right. Cash or fully digital future?
fully digital, fully
Okay.
digital. Recently, they stopped making pennies,
Mm-hmm.
right? The more time passes, the process of producing the bills is going to get more expensive. It's easier to have a digital trail.
Yeah.
Oh, 1-0. So digital,
Okay.
definitely.
One financial habit everyone should adopt immediately.
Mm. I
Well,
spend less.
what's
Spend
one of your favorite?
Yes, spend less than I make.
Been I think we're all doing that anyway.
Spend less than I make, always. Well, it's not just spending less than I make, it's also putting money on
Mhm.
because you never know what tomorrow brings. So saving, less saving, more investing, putting
Right.
money aside.
Spend less, save more, invest more, all the base. Okay.
Yeah.
All right. One system you would rebuild from scratch if you could.
System. What kind of system we're talking about? Just any,
Any system.
ooh, um, education,
Nice.
education. I think that needs to be rebuilt from the ground up.
Mhm.
How it's funded and what's actually taught.
Yeah. So what are you building next? What's next on your plate? Or what are you working
Um, at the moment, I'm really just kind of fine tuning everything I have going on currently. So within the M3G business solution ecosystem, because the name has evolved over time, but
on?
in that ecosystem, we provide not just payment processing along those lines, but we started off as a print and design.
Mhm.
So we are focusing on just being more integrated with the needs of our clients. So we're trying to create an ecosystem that takes as much of our clients' plates as possible.
Right.
When you get into business, you get into business to do a thing you love. You don't want to be the print guy. You don't want to be the design person. You have thoughts. So we're trying to create a system that can take as much of your plate so that you can focus on things you love. That is right now my primary focus and just making it more efficient.
Yeah.
I would love to be able to um, add strategic partnerships. I serve the DMV,
Mhm.
so Maryland, Virginia, GC, West Virginia, where I live, the area. I have a few accounts further out, but for the most part, this area, I
Yeah.
would love to be able to look at what I'm doing in other areas beyond me, strategic partnerships. But that down the line, I'm not there yet.
Okay. All right. Sounds good. Sounds good. So this is one of those conversations that really makes you pause because it shifts you from thinking about money at the surface level to understanding the systems underneath it. And that's where the real power is. So, Taweh, I appreciate you for not just sharing what you do, but how you see the world, how you think about ownership, and how you're helping reshape access through FinTech. Before we close, you can just let people know where they can find you, connect with you, and tap into what you're doing.
So my website is m3tonline.com. So you can connect with me through my website. I'm also on Facebook and that's but primarily the website is the easiest way to reach out to. Website will give you a broad overview of all the services I offer.
All right.
Uh, yeah, right. Don't say that.
A long time.
Very good. Let's just say a long time. So
Very
yeah, so
long time.
it's been awesome watching you grow and watching you do what you do. And this is amazing. And thank you for having me on. I hope some of the information I provided was helpful.
Yeah.
Um,
Yeah.
and I am happy to have this conversation anytime.
Thank you so much. All right. So, to everyone listening, if this episode gave you a new perspective, make sure you share it, save it, and send it to someone who needs to hear it. And if you're ready to go deeper, join us inside the Black Expertise community where we are building real conversations, real strategy, and real connection. Because Black expertise isn't just what we do, it's how we think, how we build, and how we move. I'm Renée Holtz, and I'll see you in the next episode.